Bitcoin continues to be in a pullback, potentially a corrective pullback, which could still lead to another rally before we see the next sell-off in this bear market. And the main question at the moment is that many people asked me, how's the situation overall in the broader crypto sector? So today, I don't only want to give you an idea of what Bitcoin is doing. Yes, we're going to talk about Bitcoin structures as well. But also, I want to talk about what the total market cap charts are doing. We're going to take a look at total 1, total 2, total 3. And if that interests you, make sure you stay tuned. A few days ago, we also looked at Bitcoin dominance. Don't think we need to do that today, but I think it is worth to take a look at the total market cap charts. Now, we want to start with Bitcoin, however. Here on the daily time frame, you can see that Bitcoin is moving down into the support area, and two things happened in July that were very, very relevant for us and also that were expected. First of all, the market formed the expected rally that played out, and that's the first thing, right? We said that, well, in July, usually we see upside, and that happened this time, and we're now in August, and it was a decent month. Yes, nothing really bullish, but what can you expect in a bear market? It was overall a positive month for Bitcoin, and Bitcoin reached the resistance area. So the first point is seasonality played out. July was a bullish month, and it usually is in a midterm year in a bear market. So that played out. And then the second point is the price didn't only move up, it actually reached our target zone, the resistance zone. You might remember pretty much exactly a month ago, I shared with you a Q3 update. I will link it at the end of this video, probably the most important video I did for Q3. And yeah, this was my Q3 forecast. And for July, we said, well, this is going to be the relevant resistance area between $66,200 and $76,600. Price moved into it and got rejected. Now that means technically I could now say, well, targets reached. Are we now going lower? We could do, yeah. I think that would be too easy, however. I mean, the market has rallied in a specific structure, which makes it at least possible that we get another bounce. And the reason is the move up from the July low is a 5-wave move up. And the pullback so far is unfolding as a 3-wave decline. And based on that, because we are still holding micro support for the current pullback, which is between 59,317 and 62,430, at least another C-wave rally remains possible. That's the so-called A, B, C structure, a corrective bounce in a bear market. And because of the 5-wave move up that we saw after the July low, at least another bounce is possible and likely. And this is also the stuff we're doing in the newsletter, where we take a look at what I said actually in the videos, what came true, you know, what might need revision, where was I right, where was I wrong. And so we usually give you a better overview, more context in the newsletters. If you want to check these out, you can sign up for free. But for example, this was the newsletter I sent out several weeks ago. It was early in July. I do send them out every 1 to 2 weeks, but the one early in July highlighted specifically this rally that was supposed to play out. And I highlighted here in the newsletter, in bear markets in July, we normally see good performance. In fact, July is the strongest month in a bear market year. After a 5-wave decline, we should get at least a 3-wave bounce. This is also what I said on YouTube on July the 1st, actually. So we also showed here this average return by month, and it showed that July, with a performance of roughly 10% in a bear market, is usually the strongest month. By the way, August is a very weak month. So if you want to get this additional information, I suggest you check out our newsletter. It's completely for free. I put the link into the comment section for you. Now, what we should do now that it's clear what the expectations are, at least as long as the $59,317 level is holding, we should take a look at the wider sector. Let's take a look at the total market cap charts. But please note that should this support area break, the expected next decline will likely start a little bit sooner, okay? Which would not be a massive surprise given that we're in a bear market. I would really just have to change my overall view on the market if we get a 5-wave move up and a break above resistance. anything in resistance is still, part of my overall thesis, because the idea is we're in a decline, further downside is to come. And yes, of course, the market can always test the resistance area again that was already tested. It's not absolutely needed, but only if we break above it in 5 waves, I think the wave count deserves a proper revision. For now, there's no need to, because this wave structure, the roadmap we talked about, we are talking about here every day, it's been working for many, many months. Many months, actually. Yeah, it also worked in the bull market, so can't complain here. So, and if we look at the total market cap here, you can see that the decline is still unfolding very closely with Bitcoin. I find it very interesting that the overall market structure aligns very well with the Bitcoin chart. Currently, price is testing, or it actually did test and got rejected, could test again, of course. The resistance area for a wave 2 bounce, very similar to what Bitcoin is doing as well. Resistance is here between 2.25 trillion and 2.55 trillion. Please note that, of course, an Elliott Wave analysis on total market cap has to be taken with a pinch of salt, because this is not a tradable asset as such, of course. But, a lot of you are asking, of course, for analysis of charts like these as well. And it just gives us a good idea of what's going on. I would not, however, understand it as too predictive, because again, it's not a tradable asset as such. So Elliott Wave analysis, strictly speaking, here is not valid. But as long as you understand it in that light, I think it's okay to use it. We take a very pragmatic approach here. And so it's very interesting that total market cap itself is basically doing what Bitcoin is doing. So also here we can say that the rally into the 2025 highs was a wave 1. We're now in a wave 2 correction. And this wave 2 correction should unfold as an ABC structure. Other scenarios are possible, but honestly, until the market breaks above this initial resistance, and this is when I would pay attention, but until we get a break above 2.55 trillion in 5 waves, there is nothing I need to change here. And at the moment, the expectations would be that the market will break below 1.99 trillion next, maybe after a slightly larger wave 2, which could take the price back into resistance. And this resistance area is the first real decision zone. And just a quick reminder for anybody who isn't aware yet, if you're only following More Crypto Online on YouTube, you're missing a lot of our day-to-day content. On X, we publish additional market analysis 7 days a week with primary focus on crypto, while also covering other major asset classes whenever they are relevant. It's also where we share real-time market updates, breaking news, exclusive videos, and insights that we don't always publish on YouTube. We also occasionally run exclusive promotions and special offers for our X community. If you'd like more frequent crypto analysis, faster market updates, exclusive content between YouTube videos, be sure to follow More Crypto Online on X. The link is in the video description. And again, here the disclaimer on the total 2 market cap chart is relevant as well. This is not a tradable asset as such, so take any Elliott Wave analysis here with a pinch of salt. But also here I have to say, total 2, it does appear to follow at least roughly Bitcoin as well. I would add a first resistance area, and I'm going to go to the 4-day chart first. By the way, I would not really start with micro counting here. Again, it's already questionable to use Elliott Wave here. Well, you can use it, just take it with the right it's skepticism, right? Because again, it's not a tradable asset. But I wouldn't start with micro counting here. So we stay on the higher time frames. The idea is also here that a C-wave decline could take us lower, possibly towards the $731 billion area, possibly even 577. And the idea is here as well that we are working on a wave 2 bounce in a C-wave decline. The resistance is between 940 and 940 billion and 1.04 trillion USD market cap for total 2. That's, of course, market cap excluding Bitcoin. Still interesting that it still is following Bitcoin to a degree. Please note that the idea is that also here, of course, we could see another bounce into resistance first, potentially to test that 940 level before going lower. But what I haven't done yet, I haven't actually activated the 38.2 retracement. And you see that actually, and this is so interesting, even though this excludes Bitcoin and Bitcoin reached in the current bounce that started in July, the 38.2 retracement. Well, guess what? Total 2 reached the 38.2 retracement as well, in this case at $912 billion. So just waiting here for the next leg down to start, possibly after a slightly larger bounce in wave 2. Okay, and so if we take a look at the total 3 chart, which is, well, basically altcoins only, we can see that the upside reactions throughout this cycle have really remained very, very weak. The chart also looks a little bit different, which is no surprise because these charts or these altcoins, they are, you could say, less predictable, they are less stable, and you see a lot of volatile price action, and a lot of them have really been affected in October by this rapid decline. But I can still view this as an ABC structure down in an A wave, which bottomed in February. So like on the Bitcoin chart, we treat the decline as an A wave. Then we had a B wave bounce into the May highs. But the difference here is compared to the total chart or Bitcoin chart, the bounce into the May highs was extremely weak. So yes, I can call it a B wave, but again, it didn't even reach the 38.2 retracement. So here, the wave count, I would say, on the total 3 chart shows kind of less, I'm less confident in it, okay? So I here would say it would even look best with a wider B wave bounce, but because it is also aligned with Bitcoin and the total and total 2 charts, and the Bitcoin chart suggest that we could already have started the C wave decline. I will leave that door open here for lower on the total 3 chart as well. But let me make that very clear. I'm less confident in the micro count, not even micro count, in the wave count here to the downside. What I can share with you is that the next support levels are at 582 and 491 billion, and resistance between 692 and 765 billion. That's for a wave 2 bounce. Also here, of course, we could be working on a wave 2 bounce, but what I have to make very clear, any move to the upside here seems just much weaker than, for example, on the total or Bitcoin chart. Important is that we are still way, and this is interesting, we are still way above swing lows of December 22. So the overall market cap of the altcoin sector is way above the 2022 bear market levels, which means technically, there's no reason why it couldn't still go lower. It absolutely could, but I do not expect necessarily 2022 lows to be tested. What I do think is there's a good chance we go lower in our larger support area. So I think now we have to take a look at the microstructure, which, to be honest, hasn't changed much since yesterday. Most of the parameters we discussed for the weekend remain relevant, which is why I wanted to focus on the broader sector. I will also give you a summary at the end with the most important conclusions, by the way, so stay tuned. Looking at the shorter time frame, and you see exactly what I mentioned. We have, from the July low, a 5-wave move up into that 15th of July high, then a 3-wave consolidation correction. The pullback really looks corrective in nature. We have a lot of overlap there. The support area was already mentioned between $59,369 and $62,530. This support area was tested yesterday. It was expected to be tested. It was being tested. And I think over the weekend, we probably spent time above the 38.2 retracement, so above the upper boundary of our support area. We are currently seeing that the price is moving in a corrective price channel, so in a descending channel. That descending channel is still unfolding, still playing out. There is no breakout. There was an attempted breakout to the upside on Friday, but it ended as a 3-wave move up and a failed breakout, and there was no 1-hour candle close above the upper boundary line of the channel. You see that here very clearly. It was not a genuine, real breakout. And then the market moved down lower, and we're now testing initial resistance. This is a weak micro resistance area. It's between 62,874 and 63,421. And we might spend a bit more time in this resistance area today. It is entirely possible that the larger degree 4th wave bounce is already unfolding. In that case, we would have to see a break above 63,421 for confirmation. Price is currently just testing the initial micro resistance, though, So no real change, and really we've only seen sideways action today. That means I think overall the pressure remains down. Another low is likely, whether that means another low in the currently unfolding third wave, or we are already in the larger degree fourth wave bounce and then just get that one more low in the fifth wave eventually. But the overall idea is there is absolutely no sign yet of an upside breakout, and the weekend forecast remains sideways in the range, in the channel. Maybe next week the price can attempt to break out from this channel to the upside, but probably based on what I see here right now, after one more low into the micro support area. The broader tendency, though, is still for a larger wave to bounce into the upper resistance between 69 to 72K, as long as the larger support at 59,369 is holding. Okay, and if we now take a look at the overall bigger picture, I showed you several charts, total market cap 2 and 3. They all suggest we could see maybe another bounce in August. It's possible, even though August is normally a bearish month in a bear market. Normally July is bullish, August bearish, but could still be that in the next couple of weeks we see another bounce. I mean, if that happens, it should happen from the current support area. The total market cap charts will then follow Bitcoin. That being said, short term, we might dip a little bit lower into the support area, and possibly next week we'll see a decision here in this micro support area. It is required to get a break above the upper boundary of the corrective price channel for a signal that a low is in. That's the update on Bitcoin. I hope it was helpful. If you're interested in further updates, make sure to check out our membership and our X channel for further updates. Thanks so much. Bye-bye. If you are enjoying these analyses and would like to take things a step further, our YouTube membership might be for you. It includes hundreds of exclusive member-only videos, additional posts, priority replies to comments, and the chance to help shape future content by suggesting charts and topics you'd like us to cover. For those who want to go even deeper, our Gold membership also unlocks access to the Discord analysis feed, the MCO terminal, and the Academy. If that sounds like something you'd enjoy, just click the join button below the video. We'd be happy to welcome you as a member.